Welcome to part 2 of chapter 4. In this problem, we're going to look at this practice problem. It's very important. And I want to first discuss net sales. In video 1, I said we'll cover it later in the chapter 4 videos, and here we are. Net sales is made up of sales minus sales discounts minus sales returns and allowances. That gives you net sales. So there's a difference. So it seems like it's a subtle difference between sales and net sales. They're very distinct and very different. So basically sales is like a gross sales. If you want to, like your check, what you wish you could take home, the gross pay versus net pay, same thing. It's whatever you sold minus some stuff you subtract out to get your net amount. Now, I know yet we haven't discussed sales discounts and sales returns and allowances. So this is the point. Sales minus whatever that means equals net sales. And then we still have what we've covered, and this is more of a review. Net sales minus cost of goods sold equals gross profit. So half of this is review, half is new. Not bad. So sales minus sales discounts minus sales returns and allowances equals 35,000. So whatever sales are minus 1,500 minus 1,400 equals 35,000. To get this sales number, start with 35,000, add 4,000, add 1,500, and you get 40,500. You want to check your math. So 40,500 minus 1,500 minus 4,000 equals 35,000. We've done a problem like this already, but again, 35,000 minus 13,000 is 22,000. You want to turn right around and check your work, okay? So 35,000 minus 22,000 does equal 13,000. B. This is how I work it. I'm going to show you an alternative method right after I show you my method. 20,000 minus 20,000 minus 500 minus 16,500 is 3,000. Or you could do this. 20,000 plus 500 is 20,500 minus we don't know equals 16,500. This way is very similar to that. I know it's right here where my mouse is net sales minus cost of goods sold. And I know this is 20,500 minus sales returns and allowances equals net sales. But it's the same concept mathematically is the point I'm making. I think the way I did here is easier for your calculator. Either way works. As the old saying goes, there's more than one way to skin a cat. Pick a method you like, stick with it. 20,000 minus 500 minus 3,000 is 16,500. Finally, an easy one. 16,500 minus 14,000 is 2,500. You want to check your work. And if you recall from a long time ago when you're learning how to check your work on subtraction, your answer plus what you subtracted from 2,500 plus 14,000 equals 16,500. So these two are done. 90,000 minus 2,000 minus 7,000 equals 81,000. Minus I don't know equals 21,000, and we've shown you how to solve for that, so that's 60,000. Check your work. 21,000 plus 60,000 equals 81,000. This problem is done. All right, so let's go over some terms. Freight on board is FOB. So let's say you're buying something from the Amazon warehouse. When it's still at the Amazon and you haven't put it in your shopping cart and paid for it, Amazon still owns it. No brainer, right? When it's at your house, you own it, right? No brainer. It doesn't require any thought whatsoever. It just makes perfect sense, right? What happens in between? You've ordered it. It's being shipped to you, but it's not yet at your house. Who owns it? So this is a concept that's not for Amazon only. When I was back in the business world, I bought it. We opened up a few branches from time to time, and we bought one time for a branch. We bought, this is a long time ago before cloud computing. We bought a main server, a file server, a bunch of computers, printers, and the checks are printed on these really expensive printers, and so that was a very expensive purchase. That one printer that was new, and they were still really expensive. But anyway, so it was thousands and thousands of dollars. I cared who owned what in shipping. All right, I'm going to tell you right now, I wanted it at FOB Destination. So there's FOB shipping, and then there's FOB Destination. FOB shipping, the goods belong to the buyer when they are shipped. So as soon as the truck pulls away from the loading dock, the buyer owns it if it's shipped with the terms FOB shipping. In that scenario, the buyer pays shipping to a separate transportation company. Not necessarily, but could, okay? And if they do, it becomes part of inventory. So shipping costs are part of inventory costs. FOB Destination. The goods belong to the buyer when they arrive. All right, so when they're at Amazon, Amazon owns it. When it's on the truck, Amazon owns it. When it's at your house and it's dropped off, then it's yours. So let's go over the definition again. The goods belong to the buyer when they arrive and are accepted at the agreed destination. So they ship it to where you told them to. Bam, you own it. Didn't send it to your house, but you told them to send it to, I have kids in college. Buy something, it's not shipped to my house, I tell them ship it to this alternative address. Same thing. It's arrived at the agreed destination. Not my house where I told them to ship it. FOB Destination. All right. Typically, the seller pays the shipping cost. This is why I think this is Amazon. If the seller pays shipping costs, it's a sales expense. Here's a neat little summary for you to use. Real quick before we conclude this video, I want to go over discounts. No matter if it's FOB shipping or if it's FOB destination, not relevant for this conversation. A company can incentivize early payment. So in letter A, if they offer this is how it's worded. 110 net 30. B, 3.5 net 30. C, 5.15 net 30. Let's go back to A and talk about this. If you pay your bill, now let's pretend you bought something from the company and they're offering your company a discount. So if the terms are like an A, if you pay your bill in 10 days, you get a 1% discount. Otherwise, you need to pay it off in 30. B, you need to pay your bill in 5 days, you get a 3% discount. Otherwise, it's due in 15. C, you need to pay your bill. If you pay your bill in 15 days, you get a 5% discount. Otherwise, it's due in 90. Right, and then it's certainly just listed out here, and you can read that or review, rewind, and re-listen. So if you buy something for $10,000, right there, of merchandise, and then you return, and we've returned stuff. You can even return Amazon purchases, right? Just however they say to do it. So if you return something, $500, now you have $9,500 worth of inventory, right? Let's say it was on credit. You have $9,500 worth of inventory. You also owe $9,500 if it was all purchased on credit, correct? So for A, this is how I do it. 100 minus 1 is 99. 99% times 9,500 equals 9,405. So what did I just do? I calculate the amount paid. All right. So I subtracted out the discount, assuming they took the discount, and I got 99. 99% times 9,500 is 9,405. You could have calculated 1% times 9,500, gotten $95, taken 9,500, subtracted $95, and gotten 9,405. All right. This is probably how you were taught in high school how to do it. This is what we prefer to do in accounting. So let's do B. You can always rewind if you didn't write anything down. Okay, I just need to clean up the area here. All right, so B is, oh goodness, had 99 in my head. 100 minus 3 is 97. So 97% times 9,500. And that'll give you 92.15. That's what you pay if you get the 3% discount. C is 5. 100 minus 5 is 95. So 95 times 9,500 will give you what you pay if you get a 5% discount, or 90.25. All right, so I want you to stop. I want you to practice everything I covered in this video, okay? So you have your handout without the answers. Please practice, all right? Don't move forward unless you can do these on your own. And as always, email me if you have any questions.